CTM. What's going on, everyone? I hope you're well and doing great today as we get ready for this important session. Now, we're going to be discussing, obviously, the markets. We're going to take a look here at what's going on the NASDAQ. We're going to take a look at Bitcoin. We're going to get into it all. But I really think today's session is going to help solidify what needs to be done for everyone here and everyone just joining us. By the way, if you're new, welcome. In order to go ahead and to be able to trade profitably in the markets. Not only that, whether you're a beginner or a professional. When we talk about that, where I want to start off with is if you see a lot of people out there, a lot of spaces, and the topic of conversation, something like what's going on with NVIDIA, what's going on with Tesla, a lot of very smart, well-formed, educated people. And they're trying to figure out how to get on the right side of the trade. I mean, that's just the reality of it. I've seen spaces where there are a lot of people, again, very intelligent people trying to analyze and figure out the markets. And this type of perspective on different, let's say, topics could be beneficial, but it doesn't bring me any type of alpha. They actually invited myself to go ahead and join this space. Mario invited and reached out his team. And I went up just a couple of days ago, and you know, I just didn't find it conducive to my time. They reached out again. They wanted me to make regular appearances on it. And even though there's an amazing reach, there's currently right now this morning, something like 7,800 listeners. And I imagine there's a lot of people that listen on the replay. And it's good for if you want to, I guess, go out there and like make a name for yourself or something. But that's not why I'm here. I'm here to actually make money in the markets, to do it in a way that's conducive to a lifestyle. I have a family, 6 kids. I have to make sure there's many people here in CTM that are extraordinarily busy. There are moms, there are surgeons, and there's everyone in between. We have to go ahead and make sure that we are able to stay not only focused. I wanted to bring that back up. Let me start over here. And again, just people trying to figure out what's going on with NVIDIA and Tesla. And you all know that we've been following Tesla here in 2023. And right now, a lot of people are watching this last melt up of Tesla. That's why everyone's talking about it today. And CTM, those that are trading are holding an open position, 21% into profit. That's off of 24% booked gains in 2023. Compound those two numbers together, and yes, you are outperforming almost or just about any fund out there, and the best of the best. That's also traded or can be traded on the TSLL. This is the 1.5 times ETF, and you can see that has a little bit of a greater position into open profit. The same thing is going on with NVIDIA. Now, we've just introduced this solution, NVIDIA. This has not been trading throughout 2023. And the reason being, and I tell you, just entering long again, just over here on the last signal period. And you can see NVIDIA currently up what would be 43% this year. And those are good gains. There's no question about that. There are some people within CTM that are not able to trade ETNs and ETFs, such as the TQQQ, off to a good year now, and that is 29% into profit. And the standout has, without a question, been FNGU. FNGU has just been an absolute beast this year. This is a 3 times leveraged of FANG, and it is up 185%. Now, there are certain people out there. I remember Stanley Druckenmiller months ago. This is probably into the late end of 2022, talking about how he believes that we are in a bear market. He continues to believe that, first of all, these are unprecedented times as well. He thinks that we are setting up for a hard landing. And he also said he's going to hold on to his NVIDIA because even though we're in a bear market, he expects that could go up. And he's been proven correctly. NVIDIA is obviously, everyone's aware, been on a tear. But if you don't know ahead of time what's going to happen, knowing when to be in the market, when to be out, and on what side is absolutely priceless. Please try to find any type of fund in 2023 putting up anywhere remotely to those type of gains. Now, it's been nice because in 2023, we've seen a lot of CTM been able, because crypto is kind of flat, right? Let me move over and talk a little bit about what's going on with Bitcoin. Um, crypto has been flat this year thus far. And just to zoom out a little bit, you could see that. Well, we had this nice, beautiful move up in the beginning of 2023, but since middle of March, we've been in this tight and narrow range. And the good thing about that is that's getting ready to break out, whether it's to the upside or to the downside. We should soon see some type of range expansion, but it's been tough as far as cryptocurrency gains are concerned. 20% on Bitcoin, 11% on Ethereum, and 21% loss on Cardano. Now, that is holding an open trade over here currently. Cardano, hopefully this is the one that takes us back into the green on the year, currently up 7% on the year. And these are not the type of gains that we're used to in crypto. I mean, you could look at what Ethereum did just last year, and last year, obviously nothing special. And I think it was 290% on the year. And those are beautiful gains, and Bitcoin as well. And again, these are just during 2022 bear market and well outperforming everything up, but not this year. And that's why it's been not, and this year is just getting started. I know that we're halfway through it, but we've been looking at here for the last couple of months, some pretty strong consolidation. I'm pretty sure, or I hope that we do sooner or later, and all you need is to put in a couple of good trades. Really, if you're up 11% on the year and you put up all of a sudden, like last summer, Ethereum, a 50% gain to the upside, all of a sudden you start compounding those gains. Same thing with Bitcoin, just add another 30%, gain, which could happen on one trade. All of a sudden you're looking at 60% of the year. And it would be nice to end the year 2023, even if we were to end, in the green is always nice. But if we were to end even with something like a 50% gain coming into what we expect to be an expansion year, 2024 and into 2025, setting yourself up for success. And that really brings into the next part. And that over here is, time preference. Rafael Rodriguez says, look, I greatly dislike long intros. Bye. Rafael probably just gave up the only opportunity he will ever have in his lifetime to be able to find a team to work with to give him the ability to profit in the markets. That's the truth of it. That was probably his one and only shot. The markets are extraordinarily difficult. There are people out there, very smart people out there searching to find an edge. And it's really, really difficult. The markets are incredibly difficult. By the way, just having a winning edge in the market is not enough. You need to really work on yourself. You need to work on discipline. You need to work on focus. And by the way, then you also have things to worry about like execution, including which broker are you using, and a lot of third-party risk to worry about. This is Ethereum since 2020. Let's take out 2020 because that was a big bull year. Right? In the year 2020 alone, there was some pretty tremendous gains. And you could see that, a 1,000% gain. So let's omit that year. And what about in the year 2022? That's a beautiful gain. What about in the year 2022? Another beautiful gain. What happens when you add those two together? That's when you start seeing, look at the drawdown. That's when you start seeing the magic happen. And that's what it's all about. A lot of people are looking with that short-term mindset that, I want it and I want it now. An intro? Are you kidding? This group of people who work together each and every day are willing to go ahead and discuss and talk about markets and what's working for them. And they have the audacity to put up a 3 or 4 minute intro while they prepare for the presentation. I cannot stand that. I'm out of here. Bye. 7% year over year. Historically, the average gain of the equity markets. 20 years, starting with $10,000, even adding $100 a month. Look, a lot of people, this is their investment plan. Simply dollar cost average into equity markets. Make sure, or hopefully they hit that 7%. Now, speaking of Stanley Druckenmiller, I mean, the guy's got a track record on Wall Street. He's a legend of legends. 30 years in a row with over 30% returns. Efficient markets. Stanley says that he believes, and whether it's true or not, I don't know. I've lived through it before. 2000 to 2010 was basically a sideways market. Now, there are a lot of ups and downs in between, but it took over a decade to make new all-time highs. He believes that's where we're headed right now. Now, I don't know if that's true or not. And even if equity markets do go on to make new all-time highs and then retrace, I wouldn't fault him on his opinion or anything like that. What he's talking about is the current trajectory that we've seen from 2009 through 2021, the end of 2021, he thinks has come to an end for a period of time. Whether or not people are going to be able to bank on 7% or not, I don't know. I don't know. What happens if you're doing some like CTM things? What happens if you're having a 30% return a year like Druck? You know, that makes a big difference. Now, this is starting with, a small account. By the way, if you think that you're going to start with a $10,000 account and be able to go ahead and trade for a living, that's not going to happen. I want to really warn your expectations against that. You will wound up, because of the unreasonable expectations you're trying to achieve, you will likely wind up losing all of your money. If you're starting with something like $10,000, and by the way, we're starting with Druck returns. We'll talk about CTM returns in a little bit. If you're starting with something like $10,000 in 10 years, and I mean, $200,000 at that point in a year, you're looking at potentially, if you're able to achieve that return, having something like $45,000 in income. It's a lot different than starting with $10,000. Most people are unable to go through a 4-minute intro. How are they going to be able to stay disciplined for 10 years? What happens if it was like, I don't know, 50% return? Do you think that's possible? There hasn't been a year that we could go ahead and back test our solutions where we have not exceeded that by a large factor. Now, maybe this year would be the first. I don't expect markets in cryptocurrency markets to go sideways. By the way, it is absolutely beautiful. Those within CTM now are branching out into the stock market. A lot of people now are 50-50. That's a good thing. And I hope that continues. And why we've seen a massive run in tech, right, this year, specifically FNGU, I don't expect that continues. Hopefully, we see a little bit of that beautiful dance pickup coming out from Bitcoin and Ethereum and even Cardano over here, and even things out in the rest of the year. If you have something like a 50% return, which is astonishing, best of the best, Warren Buffett, his whole career is something like, I think, a 53% return. At this point in time, though, right, you are looking at what I do believe would be more than enough income for people. I believe, or at least to have from trading. Now, 10-year plan to get there, I think that's reasonable. Now, it's going to take a lot of work. It's going to take a lot of effort. That's what we do each and every day, is we take our time to put the work in. There's a lot going on today. I want to talk about markets. I want to talk about what's going on. I mean, buying Bitcoin, speaking of Bitcoin, thanks for bringing that up. What I'm seeing happening right now is I am seeing a lot of movement here, obviously, from the SEC. It looks like a couple of things are happening. It looks like, number one, that potentially they are paving the way for further control and potentially the release of a CBDC. Now, with FedNow program in place, they basically have that already in place, even though the dollar is, for all intents and purposes, is digital. Cash still floats, but they now have full control over the system. It's essentially a CBDC already, but I think that they're going further than that. And I think that what we look at the situation that's happening with regional banks in the U.S. pretty much being set out there, left to burn I think it's all part of what is a conspiracy, and that is to consolidate the US banking system in order to go ahead and centralize control even further. Now, if that's happening or not, I mean, that's my own belief. And we see right now the SEC obviously throwing out lots of lawsuits against exchanges, Binance and Coinbase. And it looks like the US is doing everything right now in its power to push away the digital asset space from the US. At the same time, we just saw the same day that the Binance suit was released, we saw Justin, honeymoon vocals is when the bull of all bull returns. If we start seeing a resumption out of Bitcoin, if Bitcoin is able to go ahead and resume out of this channel, out of this pullback at that point in time, as we break to new yearly highs, it'll be a pleasure. The CBOE was just approved Bitcoin futures trading. We know that the CME is one of the largest volumes brokers in the world as far as Bitcoin futures. And I do see a push in that direction. I've been looking at and working on CTM solutions for the CME. This is on the 1 hour time frame. Now, 1 hour time frame, in my belief, requires automation. Now, traders post through TradeStation does offer on futures. If you're trading stocks, 1 hour time frame is the solutions that we have. In my opinion, it requires automation. Unless you're able, we only trade regular trading hours. Unless you're able to be in front of the screen and commit that type of time, and it's very difficult. Trading cryptocurrency, we trade off the 8 hour or daily time frame, soon to add the hybrid solution in. And that could all be done manually and very easily. It's very conducive to any type of quality of lifestyle. 1 hour time frame, that's a little more intensive. This is solutions on the 1 hour time frame on the CME. And we're looking here at going back to 2020. On the right is our 8 hour solution here. You could see the returns are pretty lockstep. You know, right now we're looking at 1,600% back tested return to 2020. This goes back much further. Obviously, you could go all the way to when 2011 upon the launch, right? And you notice the drawdown. What's really neat about this is a lot of people see volatility diminishing. If you look at our average trade, it's 3.2%. The average winning trade is 12.24%. And the average losing trade, I want you to focus on the winning and losing. So you can see 12% and 2%. That's a 6 to 1 risk to reward. Now, what's interesting, if you come back and you look at what's happening since 2017, so I'm going to include that massive bull market, you could see that the overall risk to reward was diminished a little bit, right? We went down to a 5 to 1 from a 6 to 1, right? And then what happens if we go into 2020, right? Get rid of that massive bull market. You could see that we're continuing to see that volatility diminish in the space. You could see that although the average losing trade has gone down a little bit, we're almost here at 9 to 1. And I just want to see what it's been like the last 2 years, getting rid of even the 2020 bull market. And not too bad. I mean, it's still close to that 9%, a little bit lower. But what's interesting about that, and what's interesting about that for me, is that there has not been, wait, hold on, one more thing. Let me get rid of the 2017 bull market and start at the bear, right? And then just over 9%. And what's interesting about that to me is you look at what's going on since the beginning and you're like, that's, tremendously massive gains. And they are, and not every year, right? During the bear markets, there were, 50% gains or whatever. During the bull markets, 300% and 400% gains and things like that. But it's together year over year compounding that adds up to these massive compounding of gains. The volatility has diminished, but not significantly. You see, we've gone from a 12 to 1, right? And now looking at somewhere closer to a 9 to 1. It's still a highly favorable risk to reward. CME looks like able to potentially get an equivalent solution. I'm interested in that in case there's a further crackdown. It doesn't seem to me that they're going to be cracking down on Bitcoin futures, on the CME, on the CBOE. It seems like those options are going to be available. Now, Bitcoin doesn't care. Whatever the US decides, TikTok next block, you could see the rest of the world embracing, opening up to it. It's going to continue. Maybe this might be an option. And if it is, we want to make sure that we have it available to us. I was looking at the 30-minute time frame, similar results. The 30-minute time frame, in so much as that, well, it gets you out a little quicker. There's a little bit more trades, 180 over the past 3 years, compared to 146. So about 40 less trades or 12 less trades a year. But I'm looking because I don't really feel comfortable holding over the weekends for any type of solution for that. And then we have also, there's a lot of people that cannot afford yet to trade the big contract. So I'm looking at solutions here on the micro Bitcoin futures as well. And it looks like in 2023, they are comparable now to what's happening on the big contract on the CME. Drawdown is a little bit different. So is the return. But I mean, look, this is comparable to what we're doing here thus far on regular crypto exchanges, as Bitcoin here, 20% in 2023. So that's something that's been on my mind, that I've been working on further solutions. And if there's greater interest within the community, I'm going to take that up to the summit team and to see that if we could continue to make even further progress. Looks good now, but we're looking for the best. There's no question about that. Speaking of summit team, another thing that I want to continue to work off of, coming off of the prior week's CTM summit team meetup, is that hybrid solution. Because a lot of people, it is difficult for them to trade 3 signal periods a day manually on the 8-hour time frame. A lot of people need their sleep. Sleep's very important. Now, there's a lot of people who are willing to go ahead and for whenever we have that potential signal occurring in the market, they want to make sure that they're able to be there and they're willing to do whatever it takes. We've looked at Flavorous Frav has been really good, taking lead on this. Andrew went ahead and made a template that kind of omits the overnight signal period. Now, there's one caveat: it doesn't on an exit, on a deviation, odd even exit. So that, over the course of, let's say, the last, I think 5 or 6 years, I think there's been 2 or 3 times that's happened. In those cases, potentially we'd be looking at just having the max stop loss in place. But a hybrid solution, why the daily time frame offers significant gains. When we talk significant gains, we're talking about well exceeding on Bitcoin this return, on Ethereum significantly more. But the 8-hour hybrid solution, 2 of 3 signal periods, offers a significantly greater, let's say, potential in the markets. So that's what we're looking at. Tomorrow, right after our session, we have a dev meetup. Just kind of circle up with the dev team and discuss what's going on to make sure that those continued organized efforts continue. Looking at the markets right now, and let me start off with this, and we're seeing that the World Bank is talking about, I mean, I don't trust anyone, but they are talking about economic slowdown. They're talking about that it might even reach the 2008 levels. We are seeing today a revision out of Germany now putting the EU in a technical recession. We have over here 2 quarters in a row of slower GDP growth, and we're seeing China obviously roll over. China's recovery is flattened out. That is not going well. And I could really see or make the case for this continued global slowdown that's occurring. Some people think that the US is on the verge of being able to pull off a soft landing, being able to get through the tightening cycle without a recession, or that if they do enter a recession, it's going to be something like we saw in April 2020. So quick, that no one even feels it. Now, why anything is possible, it seems unlikely that as the world is slowing down, that the US coming off of one of its sharpest and tightest tightening cycles in history is going to be able to walk away unscathed. Let's move over. Let's look at what's going on here on the NASDAQ. And we saw yesterday, finally, just like one of the first triple digit red days we've seen in a while. And we're bouncing off of that and we're bouncing like into resistance. So that's the first thing that needs to happen if we're going to have any type of attempt at, taking these yearly highs out and or following this slope up. We could see that we need to first regain the resistance that we are currently butting up into. I also see kind of developing over here, highlighting this trend line over here, what looks like a broadening wedge occurring up. That's a topping pattern, huh? I really think it is, but you know what? What we're going to do is look for where this thing continues to roll over after 1, 2, now 3 repairs in place. Things are looking good. It is the highlighted red line that would signal that we are breaking down. It could happen. I know a lot of people right now are quite bullish. That wasn't the way off of not only this whole area, and look, I remember on the first break for me, I had a very bearish bias. That was a close your eyes type moment. Like I don't believe it, but it's follow price, right? And then bringing this forward, there's another point I wanted to look at. I just realized yesterday at this point in March, the like I'm looking at now and I follow other people's analysis of the markets. I really enjoy consulting all views and perspectives, always looking to learn and firm up my own. Most people that are hyper bullish today were significantly bearish in this area. I learned that yesterday talking and joining in on a spaces. And we had this conversation back in March. And at that point in time, everyone was quite bearish. Those people now are quite bullish. I'm very hesitant. I pointed it out before. Let me point it out again that everyone's expecting a recession, but most people are expecting, from what I understand, if we do enter a recession, it would be short. First, it was, look, inflation's transitory. Oh no, inflation's hot. We got to raise rates aggressively. But don't worry, there will be no hard landing. And then the Fed is like, oh, it's looking like there'll be a hard landing, but it's going to be really soft and quick and no big deal. And that's the worry over there. And the thing about it is once you get into one, you never really know how easy it is going to get out of it. And I think that if the Fed is making an error, I personally believe they think that if things get too bad, they could always go back, March 2020 style, and flood the system with liquidity. They could just flood the system. And why that's true, if they wound up actually damaging things that take a long time to build back, it could take a lot longer. I remember what it was like throughout the dot-com bubble bust and also the 2008 recession, and it took a long time to really get things cranking again. Like the term back then was green shoots. Like it looks like things are starting to grow. Nah, and it took a long time. So that's a concern. Thanks, Bob. I appreciate that. If you're new here, welcome. Please do go ahead and not only hit the like button. I know that it really helps the channel and its reach, but also do subscribe. Do hit that bell icon. And really, if you're not yet part of CTM, go ahead and do subscribe. I guarantee you that it will offer you the ability to not only meet when I say guarantee, I roll that back. I mean, nothing is guaranteed in the markets. And when I look at something, and I could look at with you like what we could say has happened on Bitcoin and Ethereum, and why together we've been able to develop these strategies. It was in 2022 in March where CTM began these mechanical strategies. This was the launch date. And not only that, it was sometime around the summer that CTM settled in what is now the preferred settings. And that was with a 12% stop loss on the buy side, right? And, it was just a few months ago that we changed that or adjusted that to 3%. And not much of a difference, but it's a big difference. And we got, if you haven't seen that video, by the way, go into the Discord, go into the Nuggets channel. MD has recently provided a nugget clip of all the work and research to determine why we felt that even though over a longer time period, it kind of decreases performance a little bit, why it makes it more steady and why we felt comfortable moving that to a 3% stop loss. But past performance, I mean, it's a very short time we've been forward testing. Same thing with things like FNGU, right? TQQQ. It's only since 2023 that we've been forward testing, and why we could go back and we could look back further and say what happened since 2020. And this is just the buy side alone. And, it's just since 2023 in the middle of January that we've been trading these things live. And yes, they do continue to perform extraordinarily well in real time forward tested, but all we could do is develop our edge. A lot of people, I think, where they go wrong and they first enter into the markets is that they start trading without a plan, and that they spend a lot more time trading without a plan than working on actually what is required to have a trading plan in the markets. I truly mean that. You know that. If you're listening to this, and for how long did you trade in the markets without a plan? Way too long. And you heard everything that's important. You heard it before. You heard you have to go ahead and cut your losers short. You heard that you have to push your winners. You looked at what the risk to reward was on Bitcoin going back to 2011. Here it is on FNGU. And you could see that the average winning trade is 8.5%. The average losing trade is 1.36%. Again, you have what's greater than a 5-to-1 risk to reward. That does not mean that on each trade we take that we're looking to gain 5 times as much as we're risking. Actually, the average trade only yields 1.6%. The average trade. That means that we're cutting our losers short. That means that we are pushing our winners when they allow us, and only a small portion of our overall trades are making those significant gains. If you look at the list of trades, you'll see, for example, small losses, big gains. Small losses, big gains. Small losses, small gain, small losses. Do you have what it takes? This is April, the whole month of April, to take 10 trades, losing trades. You don't get to participate in the upside if you're unable to do that. Right before that, that one game basically erased all of those. And you could see small losses, nice gains. Look at the string of losses. This is coming off of March. 1, 2, 3, 4, 5, 6, 7, 8, 9 in a row. Do you have the fortitude to be able to do that? Or are you more along the lines of Raphael and you're like, long intros, goodbye. I don't have time for that. Oh, do you have time to take 10 losses in a row? You don't get to participate in the pushing your winners. Look at this beauty. This is January. Look at that beauty. This is when everyone was bearish on the markets, as bearish could be. Look at that beauty. So, CTM. 7 and a 10 small loss. It takes absolute fortitude to be able to trade through it. Yeah, Christopher. And also Christopher's asking if we could take a look at gold, and also that if we could look at what's going on over here. I wanted to just point out that we're seeing oil coming off this morning on news that you saw the Saudis just cut their production again, another million plus barrels starting in July. Look how the US responds, and that is the US will do anything, right? Like the US reaching out to Venezuela, the US reaching out to Iran, looking to get another million barrels on the market. Let's look at oil's response to that. Let me jump over here and take a look at oil down 2% on the news. And it's okay. It's still after the last breakdown. The last breakdown was over here of this trend line. Breakdown. By the way, we were testing the trend line resistance. And then this is when we had that first Saudi OPEC cut, and then we gapped up high. We came all the way up. We had this trend line, or I had this horizontal resistance a little bit lower. I had it over here. It looked like we were breaking out. Market proved me wrong. I readjusted the trend line up further in case that we're able later in the year to trade back above it, to have that awareness. And then we wound up breaking down again. So getting back on the right side of the market, and right now we just look to be flatlining over here after that leg down consolidating, So it'll be interesting what the next move is, whether it's up or down. I think that I'm going to just, it looks like also a broadening wedge over here. Sometimes you just have to step out a little bit. There's nothing really to do ever since our sell. There's no reason to do anything, close this trade, hoping and waiting almost for a further leg down or to be proven wrong and break out above. Gold bid today. I'm trying to think about why gold might be a bid today. And more importantly, I'm hoping that I have this chart over here with the trend line drawn in. I don't have it. It's not the wrong chart, so I'll draw it in with you really quick. I just want to see if we've had a breakdown or not. So I'm on log over here, and I'm just drawing this trend line straight up like this. And nope, we haven't. Now, if I take that off log, I just want to make sure that, well, if I take it off log, then we for sure didn't break. And I'm just kind of looking at, I know that we had a retest of this support recently, because we looked at the resumption up. I don't have the chart pulled up right now. Let me pull it up. Let me pull that up. There we go. So it looked like yesterday we were on the verge of breaking down out of this cup and handle. So when I talk about cup and handle, what I'm referring to on gold is this zooming out over here. And let me zoom out onto the monthly time frame with you all. And you can see that gold is currently undergoing this massive cup and handle. And right now, this is the handle portion. And it looks like it's on the verge of breaking down. We had this buy impulse occur off it. We were talking about that last week. And stop loss, the low of that bar. We haven't closed outside this trend line. That's a very tough call yesterday. I just pulled up this chart. I haven't seen it. I imagine that there were people that, if they had the trend line drawn in a little better than myself, would have called that a breakdown yesterday and exited. And I don't think they would be wrong. And I think they did that. There's everything good with that. Now, our stop loss, though, is the low of the wick here on that buy impulse. So regardless, that's very subjective. And that's the thing about trading subjectively. You could do very good trading discretionary as long as you spend a lot of time and focus on something that might not be that attractive, and it's managing risk. Like lines on a chart are just lines on a chart, except that they offer you the ability to be able to manage risk around that. And if you're able to do that and execute your plan, then likely you're going to be profitable. Now, the thing about a mechanical system and all CTM 2.0 systems and strategies that we look at, which are mechanical, they're black and white. There's not like any room for discretion about if a behavior is going to be changed, like the stop loss I talked about on Ethereum. That's done, first of all, through research review and then making a deliberate rule change. It's not like, is this trend line pierced or broken? And how am I looking that or how am I viewing that? Yeah, you can't back test discretionary. And that also leads like human error involved in so much as that when someone is looking at the charts and they're trying to develop a strategy, they're kind of going to not on purpose, but subconsciously omit things that do not fit what their view of what they want to work. They'll just like, but as you've all learned from following a mechanical strategy, like a small difference and a small difference, I'm talking about even commission, right? You could look at what we do here on Bitcoin, and let me just come back and I'll do it from nothing special. I'll do it from 2021. And you could see that this includes over here 0.1% commission. A lot of times you see people, ChatGPT, help me create a strategy that makes me rich, and it can't be executed in real world, or worse, it's not including commission. If you take away the commission, this thing becomes significantly more profitable with a lower drawdown. But you got to include all details. And by the way, if you're trading off of something like Coinbase with a higher commission, it's going to reduce drawdown and increase. It's going to increase drawdown and reduce overall profitability. Everything matters. Everything matters in trading, and you have to get it all right. When you're doing that discretionary, you leave out and you omit a lot of small things, and it's not done on purpose, but it does lead to error. Um, so that's a tough call. I think that someone yesterday could have said that we closed below the trend line and exited this trade, and that's a good move. But if you close in back above today, you should get back on the right side. I think, you know, right now, as of today, closing back above the trend line, it looks like the handle is still in play. So whether or not it was something like as simple as yields coming off today, the dollar coming off, or it was the revision out of Germany showing that Europe's in recession, and the market looking and eyeing slowdown. Yesterday it was like the market's eyeing growth and the Russell was up 2%. And I was like, oh, it doesn't seem natural or right. But today it looks like the narrative or the story has reversed, and instead of seeing a rotation into growth, actually we're seeing gold bid. And if that's happening because of slowdown or the weaker dollar, I'm not really sure. Is it because oil's getting hit? It could be any of those things. And that's when I talk about, well, there's a lot of really smart people who are discussing markets all the time and trying to figure out, but markets are really complicated. And the more you try to get into them, the more complicated they get. One of my edges is simplifying everything down and making it as simple as possible. Now, whether or not that's with just some lines on a chart, right? And then being able to manage risk around that, which is good, or being able to go take everything out of the picture and not have to guess, but know when to be in the market or when to be out of the market, and also on what side. That right there is priceless. Ethereum here is currently out of the market, but a lot closer to being able to trigger still on the buy side than the short side. We know on the 8-hour time frame, we're in a nice uptrend, losing momentum here, we're getting closer to a point when we could be on the upside or downside. This is when we see the beautiful dance take place. You could see Cardano here short the market, Ethereum just exiting along, much closer to the long side, and Bitcoin going ready to go short and or long. That's the beautiful dance, because when there's a lot of uncertainty, knowing that you're going to be positioned out of the outcome. When I talk about outcome, we've been consolidating here going on for a couple of months since March into April, May, now June. It's a long time, but we had a big move. It's normal to consolidate after a big move. When we have the resumption out and or down, I feel confident CTM is going to get us on the right side. And for perspective, look at what happened in T triple Q. You take out these last two trades, and it was flat for 2023. Now showing extraordinary gains. And it's saying extraordinary because, look, this is the expectation, and that is factoring in the good and bad years, the average. If you have a decade of sideways movement, you're setting yourself back 10 years. Whether that big move is up or down, it remains to be seen. And let's see if we could just take a little bit further look at Bitcoin and Ethereum here together. So let me go off the rails here and just have a little fun with you all for a moment. And this is amazing because this shows a beautiful entry. This is occurring not off a log chart, right? A log chart is going, I don't want to get off I want to stay on linear and show you this on a linear. If you were taking this trend line break on the linear right over here, right? It's amazing because look at your risk to reward. Let me just show you. And like stop loss is the low. So your stop loss on this entry is 10%. Now, just because it's 10% away from market doesn't mean you have to risk 10%. You could be risking 1%. You could be risking 2%. You could be risking 5% or whatever have you, but it's 10% away from market. And then the potential for where price is today, you could see 36% to the upside, 3-to-1 risk to reward. So far as high as almost 5.5-to-1. Now that trade stops out. So you take a 10% loss if you were risking 100% of your account, and then you move your line over like this, right? And then the next entry, this is like CTM 1.0 style, and it's good. It's enough to be profitable in the markets as well, right? And you can see over here now you're risking another 10%. And the risk to reward on this, you can see to market right now is a 5-to-1 risk reward. So making up for that first 10% loss, it was as high as 8-to-1. So you could see, or what I'm trying to show you is that the risk to reward offered over here is very conducive. That's just buy side only. I wanted to look, so let's look at, I'm not sure. Oh, this is not my right chart for gold. That's why I was over there. Let's look at Bitcoin for a moment. And we could see here this aggressive line, this double black diamond on the 2-hour time frame. What we said to happen after we saw Bitcoin here under pressure, Binance, Coinbase, and then the bounce we saw, if you're looking at a smaller time frame, the 8-hour, this is the Binance low. Price came up overnight during early morning New York, took out that low on the Coinbase news. Price started rallying. We pointed out two things need to happen for any chance of a resumption, even though price was bouncing. We talked about this double black diamond line that I'm highlighting right here. It's a very aggressive entry. It has a low probability of very good or favorable risk to reward. And then you have over here this conservative line of entry that I'm highlighting, right? So thus far, but so one could say at this point in time that, well, that seems like pretty strong support. It was tested on very important news. It was tested on SEC bringing litigation versus Binance and Coinbase. If you go back and you see where that line is coming from or why it's in the market, When Luna collapsed, that's where price found support. And then after we saw Three Arrows and Celsius collapse, price rallied to that point. That's where this market first formed support and then resistance. Coming up, you can see that's where price rallied to over here into late February, early March, before the US banking crisis. And that over here is held. If price holds over here and is able to resume up out of this line, that's extraordinarily bullish in my view. In my view, testing this important support, this level that I just pointed out to you, and not being able to trade below it, but firming it up and then resuming it out, that's going to give. And that's, of course, assuming a couple of things. It's assuming, number one, that price is able to get above light local resistance here, new all-time high over here, and come into what I deem to be the next area of resistance right now in this area between 32 and 34,000. Well, if we start resuming up, we'll look at it pretty intricately. But right now, rough, broad strokes. And if we break out over here, well, then this rally could actually become something very nice. And we could be targeting horizontal resistance around 37, 40K in that area. And I would feel much better about the current bull market breakout that's occurred ever since the break above the second time, 17,250. We called it together in real time as it happened. The bull market breakout in December, prediction, talked about what needed to occur, got ourselves back on the short side and then back on the long side. And we are not just assuming, since we broke out of this massive descending wedge and then why it's a bullish breakout, that we take it for granted. And that means that this is going to eventually lead to new all-time highs without having an invalidation. Like, invalidations happen in the markets all the time. So it's not so much where you want to be right. And by the way, everyone was so bearish over here. Everyone is so bullish over here. We just talked about, like, we could be coming in for a correction. Something's not right over here. And since then, we've been in correction. We were off by the top by 2 days from where we were looking for that correction to take fold, and price continues to consolidate. But if we lose this area, this here becomes the most important test for the bull market. If this were not to hold, the bull market breakout hasn't been invalidated. I want to know where I'm wrong. It's more important than where I'm right. On a very short time basis over here, this is a 2-hour time frame I'm showing you. This trade triggered, right? For me, it did above the double black diamond entry, stop loss underneath that last Coinbase morning low, underneath the 25,250 line of support. If that were to break, the trade is out. Now it's an aggressive entry. To see some type of higher probability resumption occurring, we need to break out above this trend line over here. Initial claims were up, right? Beginning of potential signs, but I think that it's going to be time soon for the markets to focus in on the Fed, right? Jerome gets the mic in next week, is the 14th, and he's going to be letting us know look, they're central planners. It's a centralized system, right? Got to love the idea of Bitcoin and decentralized system. And so Bitcoin is growing up. The macro greatly affects it now, but we live in a central planner's world, and they're looking to consolidate that power. Central bank digital currency. Anyway, friends, family, I hope that this session was worth your time. I try to make each and every session valuable, invaluable. If you have the time preference, I really think that it has the ability to not only help you achieve your wildest dreams when you got into the capital markets, but exceed them. Thanks for being here, everyone. Thanks for working together. Thanks for making this all very special. If you are here on your way out and you didn't get a chance to hit the like button, please go ahead and do that. Have a beautiful day, everyone. I'll see you all later. God bless you. I'll talk to you soon.